All right, and we live. Let me make sure my Instagram live is on. We going live. Yeah. All right, and we live. Let me make sure my Instagram. All right, so we live. All right. So this is day six of what we're calling Livember, right? And on today, we're gonna talk about taxes because today is Save Your Money Saturday. Yeah, you heard me right. Save Your Money Saturday. And so what we going to do on today is help you navigate taxes before we even get there, so that way you can actually have a successful tax season, not something that you're going to be stressing over and be like, "Oh, here go taxes." No, man, we finna get into it. We finna have make sure that you're prepared and ready. So when tax season get here at the top of January, you're gonna be like, man, this a breeze. This is gonna be a breeze, right? And so today, the title is Do You Want a PPP? Do you want a PPP? Right? I know the actual title is gonna be a little bit different, but do you want a PPP? And so, what does a PPP actually mean? It ain't the PPP loan that they was giving out a while back. This ain't that. This ain't that. Right? So the PPP is preparation, process, and prevent. Right? Preparation, process, and prevent. And so, what we're going to do, we're going to walk through how to actually prepare, process, and prevent, so that way you can actually save in this tax season. And so, I'm going to be talking to three different people. We're going to be talking to the individual owners, we're going to be talking to the business owners, and we're going to be talking to the high earners. Right? We're going to give different ways that you guys can prepare, process, and prevent. All right, so let's get into it. So we're gonna start with the first P, which is preparation. So we're gonna start off with the individuals. So in order for you to actually see a successful tax season and not really be worried about, oh man, I need to go ahead and get these taxes in, there are a few things that you need to actually do as an individual. And this is just for everybody, right? Because everybody's an individual, even if you're married filing jointly or married filing separately, right? First, you need to make sure that you gather all your W-2s, all your 1099s, and all your other income documents, right? Because I know some employers, they don't give out they W-2s on time, but as soon as you get your W-2s, all of them, think about all the jobs that you did throughout the year. If you had did more than one job, get all of those together. All your 1099s. Have you worked as a contract worker? So have you done Uber, Lyft? Have you done any contract work for somebody that you signed a paper to receive a 1099? Have all of these documents ready before tax season, right? If you can write down all the people's names of who you actually work for, write all those down, so that way you can expect all of these documents to come to you. And so any other income documents that you may have. Number two, make sure that you track your deductible expenses. So what are these? These are your student loan interests, right? A lot of people don't understand that you can write off part of your student loan interest, right? You can't write off the entire student loan, but you can write off the interest of the amount that you paid, right? And so your medical expenses and education costs. For education costs, this is for either you're a student and you get a 1098T, right? Or you're a teacher and teachers actually get a credit for setting up their office or their room or whatever up to about $300, right? And your medical expenses, any amount that you paid out of pocket for your medical. So whether that be therapy, whether that be the dentist, you actually paying that copay for going to the doctor. All of these things you can actually write off on your taxes. These are deductible expenses, right? and make sure that you organize your receipts for some deductions like charitable contributions and your child care expenses, right? Your charitable contributions, these are things that you pay for, or you donate your money to, like tithes. You can write off your tithes. So if you know how much you actually spent or gave in your tithe to a church, make sure you have those receipts, because you don't want the IRS coming back and like, oh, you said you gave $10,000 in your tithes, but you only make $20,000. So how did you live? Right? We want to avoid all of those. So make sure that you actually have your receipts, and your church or your organization can give you a document stating how much you actually gave. Now, if you gave in cash, you can't track that, right? I know some churches nowadays, they actually have it to where you can give online, and you typically can go and add up all those amounts and have everything ready. So, and your child care expenses, let's make sure that you actually have everything you need when it comes to daycare, after school care, right? And they have to be below a certain age. You can't say, yeah, my 18-year-old who in after school care. Nah, that's not how that works, right? I want to say it's 12 years old and below. You can actually write off that child care expense on your taxes, right? And so now we're gonna go to the business owners, right? I know it's not a lot of business owners out there. No, I'm just playing. It's a lot of us out here, right? So for the business owners, make sure that you actually have your P&L, your profit and loss statement, so that way you can actually ensure that all your income and your expenses are categorized. So that way the process of having to go through your prepare or whatever platform that you're going through, you have all that stuff ready. And it makes it so much easier. So much easier. So platforms like what is that platform? Um there are a few platforms that you QuickBooks, if you use QuickBooks, they can give you a P&L. Honeybook, if you use Honeybook, they can also give you a P&L. So having that profit and loss statement actually makes the process so much easier, right? And you don't have to go scrambling through receipts or having to go through your bank statements to actually get things done, right? So now make sure that you actually have your receipts for your business expenses like travel, marketing, your home office deductions, right? So have all your receipts. And this isn't to say that you need to have a paper receipt, right? Have your bank statement. So the one thing that I always recommend for business owners is don't have your business expenses or income commingled or commingled with your personal funds, right? Because it gets a real messy. And then if the IRS does come, now you just scrambling and like, yeah, I think I use this. How do I know that you actually use this for a business expense? So having a business account actually helps separate those two, right? So make sure that you have all your receipts or your statements showing where where you actually spent your money. So now, number 3, separate your personal and business finances using accounts for business. As we just said, we want to make sure that we don't commingle funds, meaning having our business funds in with our personal and our personal with our business. These should be two separately different things, right? My personal is over here, my business is over here, right? And it makes it so much easier to track, right? And so we don't want to do that. If you're a business owner, even if you just starting out, get a business account. Get a business account, right? We not just doing things just to be doing it, right? So for our high income owner, for our high income earners, make sure that you actually prepare multiple income or a report for multiple income streams. So your investments, your rental properties, your side businesses, make sure that you have a report for all of these income streams, right? Make sure that you actually work with a tax professional to maximize all the strategies like tax loss or tax loss harvesting and charitable contributions. So that way you can make your process a whole lot simpler. Ensure that all of your records of investments and retirement contributions and employer stock options are well kept up with, right? So we move on to the second P. So we just went through the first P, which is preparation. Now we go through process. For individuals, make sure that you actually use you can either use a free IRS tax filing service, or you could go through a tax preparer, right? I prefer going through a tax preparer now that I understand what tax preparers actually do. Well, the ones that are well versed in what they do, right? I'm not just saying go to anybody who can do taxes, but if they show that they can help you save money as an individual, give you the knowledge that you need to plan for next year, I'll go with that person, right? Make sure you use a tax preparer or a free IRS filing service if you're within that income range. Determine whether you need to take the standard deduction or itemize based off your eligible expenses. So this means that if you spent $13,000 on medical expenses and you gave $5,000 to the church, you're well above that standard deduction, and I wouldn't take that. I use that itemized, but a lot of people wouldn't necessarily know that going through TurboTax or H&R Block. People don't know that, because if you spend more out of pocket, the standard deduction is just for the majority of people who actually don't meet that threshold. And the standard deduction this year, I want to say, is going to be $14,600. So if you know you spent well above that, go to a tax preparer or a tax professional. I'm gonna say it like that, tax professional, and make sure that you actually review your tax bracket to see if there are some things that you do last minute to reduce your taxable liability. So like a IRA contribution, right? 401k, driving that money into those things, because those things are pre-tax, and you can make sure that you reduce your taxable liability that way. So if you made $100,000 gross, but you put $30,000 pre-tax into your IRA or 401k, now how much do you make? $70,000, right? So for business owners, let's make sure that we have the correct forms. So your Schedule C, right? That's for your sole proprietors, and that's also for your LLC on, right? S corps and C corps, those are totally different, right? What is a S corp and C corp? We're not going to dive deep into it, but once you hit a certain threshold, you save more money by electing to be a S corp or a C corp. I know most people wouldn't necessarily be a C corp because that's a high dollar threshold that you would have to meet, right? And so understand that your estimated tax payments, and make sure that you get everything in order with the actual earnings that you made, right? So estimated payments are payments that you make to the IRS throughout the year, right? Throughout the year. So that way, by the time tax season get here, you already then calculated how much taxes that you're going to owe, and you've already paid that throughout the year. So it's like a payment plan on your taxes. So instead of paying that one lump sum of taxes, you pay it throughout the year, and it's very beneficial. So number 3 for business owners, make sure that you hire a tax professional. Avoid key mistakes in deductions and triggering audits. So don't go lying on your taxes saying that you had a business just so you can save money. Don't do that, because if you do that, you're gonna pay way more than what you saving, right? And it's not to even scare you, it's to let you know that the IRS, they slow, but they not dumb, right? So what are some of those triggers that the IRS look for? If you saying that you spent, let's say $1,000 for marketing, $3,000 for travel, $5,000 for self-improvement, or whatever the case may be, those rounded numbers, man, come on. We don't even go to Walmart and get rounded numbers on the machine. I probably get one every year. So these are things that the IRS looks at and like, I know you ain't did that. I know you ain't did that. So any tax professional that say that, oh, let me do this, and you review your documents and you see those rounded numbers, or you don't even have your receipts, but they still put those things in, run. Because at the end of the day, they not gonna pay for it. You are, unless they actually put their name on your tax return, and they gonna pay for it too. Right. So for our high income earners, think about filing early to reduce the risk of identity theft, or which is more common than for high earners, because you know you make a lot of money. You can consult a tax advisor, somebody to help you plan your your income and how you can actually save. So those tax strategies to help you save throughout the year, right? And then analyze tax deferred investments. So that way you can actually minimize your taxable liability this year, right? So we're gonna move to our last P. So the first P, we had preparation. The second P, we got process. And third P, we got prevent. And if you have any questions, make sure that you drop them in the comments, and I'll be glad to answer those. Right. So how can we prevent? As an individual, we can avoid common mistakes like not reporting all your income. So your side hustles and all of those things, make sure you file it, right? Like I said, the IRS slow, but they're not dumb. So I know a lot of people say, well, the IRS ain't gonna know. Well, you got some people that actually tell on you, called the whistleblowers. Go on the IRS website and look at whistleblowing, and you'll find out. People will tell on you. So make sure that you double check your social security numbers and dependents for accuracy, right? Make sure that your social security number is right, and make sure that all your dependents that you're claiming, make sure that you're claiming them. You don't have nobody else thinking that they finna claim them either, right? Make sure that you keep copies of your tax returns and W-2s for at least 3 years, because the IRS can go back and say, hey, we need an audit, right? So you want to have all your documentation, all of your files ready whenever they do come. So when they say, hey, I need you to prove or show me how did you come up with this, you are already prepared, and you can prevent paying fines, right? For business owners, don't miss certain deadlines like March 15th for S corps and partnerships, and April 15th for sole proprietors and LLCs, right? You don't want to miss these deadlines for S corps. Like I said, they pay quarterly taxes. They don't pay yearly taxes, right? So things are different for people who actually reach that threshold. So make sure that you're actually taking taking the deductions correctly, right? Based off the business percentage that you actually use. So let's just say for your home office, if you know that you only go in your office for 3 months out of the year, you cannot claim 100%, right? Now, granted, if that room is strictly for business, okay. But if you use it for, you really can't use your home office for other things outside of your home office, right? It's supposed to be strictly for business, right? And so let's make sure that we actually maintain records just in case of audit. So same way with the individuals, you want to make sure that you have all your documents for years to come, just in case the IRS say, hey, we need some documentation, right? For high income earners, I don't know why I get so stuck on these words, but it says prevent IRS scrutiny by ensuring that all forms such as the K-1s and 1099s are reported. So making sure all your income is reported and you ain't leaving nothing out, right? Stay compliant with foreign income reporting. So that one really don't, I'm not going to say it don't affect most people, but for those who actually deal with people overseas, then that one is for you, right? And avoid penalties by working with a professional to manage complex strategies like income shifting or trust, right? So these are your 3 P's, the PPP, right? Preparation, process, and prevention, right? We want to make sure that we have a great tax season, right? We don't want no audits. We don't want to have to worry about audits. We don't want to have to worry about, dang, do I have everything I need? Yeah, we do. Because after you watch the video, you gonna go back and be like, okay, let me figure out how I can actually get everything together before the tax season even gets here. How can I prepare before then to expect these documents to get here? And so to help you guys, if you want a free document of a checklist for individuals and business owners and high income earners, I want you to comment down below. Oh, my bad. I got distracted on here. I want you to comment down below taxes, and I'll send you over that free document, right? And so, with that being said, man, it's Save That Money Saturday and day 6 of November. And hey, I hope to see y'all. I know I'm gonna see y'all tomorrow, right? Because y'all gonna stick with me for these next however many days. So until the next time, make sure you follow me on Instagram, YouTube, Facebook at the Marion Davis as it is on the screen. And I'll see y'all in the next one. Talk to y'all later.